Let's get more on the health of housing as we get into the spring season. Joining us this morning, Invitation Home CEO Dallas Tanner. Dallas, great to have you. Your own shares are pretty much back to the highs of the year. There is this budding discussion about maybe a rolling recession in real estate that is moving into commercial but out of single family. Is that how it feels?
Yeah, it's interesting. I mean, single families held up really well, all things being equal. It feels like we've sort of had rolling bits of bad news across sectors, starting in tech and then eventually kind of working its way to commercial real estate. But at the end of the day, if you look at kind of the average household or the average consumer, is still pretty strong. And I think more importantly, as you mentioned the mortgage application data, what's interesting here is that you still have 83% of mortgages in the U.S. that are sub 5%, and 63% of all mortgages are sub 4%. So I believe that kind of price stability in current mortgages across the country is actually helping buoy probably housing prices, and it's actually created a pretty favorable environment for builders.
Right. I mean, isn't it also some velvet handcuffs for those who still benefit from those low mortgage rates? And isn't that suppressing their willingness to list, which puts all the onus on the builders?
Yeah, you're spot on. The lock-in effect, I think, is very real in terms of people, trying to balance out that decision for what they want to do. To your point on the builders, if the 30-year fixed rate's in the low sixes, in the conversations we're having with both public and private builders around the country, they're able to buy down those mortgage rates to high fours, low fives. That's a pretty compelling argument for somebody who is on the side is thinking about wanting to own a home. But I think at the end of the day, that those velvet handcuffs, so to speak, are very real, and it's creating less transaction volume. There's no doubt about it. If you look at any of the data out there on new listings, on a year-over-year basis, there's much less coming into the spring and summer selling season than was even last year, which you sort of understand, but it doesn't help create more volume. It's certainly going to be a challenged market from a supply perspective.
Dallas, specific to your company, a number of analysts at least weighing in with questions about California in particular, somewhat important market, regulation there in terms of rents, what we may see there. Seattle also actually increased scrutiny over rent growth. Is that a concern for you? Would you happily swap out your exposure in California for another region if you could?
Well, we love California. It's one of the greatest economies in the world, quite frankly. There's no doubt that housing policy is becoming something that is more at the forefront in terms of both, questions around affordability, but really the real pressures here. The villain in all of this is supply. And California, much like, some of the other states in the country, is really supply constrained. One of the challenges generally, and it's not just a California issue, is, new supply happens at the very local parts of real estate markets. We can create federal policy. We can create a bunch of focus on things that make things better, but we really need at the local levels to work with planning and zoning boards to approve more housing, get more housing supply into the marketplaces. That creates some of those pressures that you mentioned. And I think as local municipalities get smarter around how to work with developers and builders, you'd actually see more supply come in. There's other markets that do this very well, like Arizona, Phoenix, and Florida are great examples of where it's much easier to bring in new supply. So that is going to be a challenge for those parts of the country where regulation and permitting is a really hard thing to come by in today's world.